when everyone's on one side of the market's going to do the opposite thing. So much bearishness is built in that any crumb of good news, such as the inflation news that we've been getting, interpreted positively by the market, and of course the hope of a pivot by the Fed. We have to get no more than 25 basis points. 50 would be, I think, a disaster. But we also need to get the messaging that not only does the Fed see that their policy is working, but that they are very near the end of their tightening, not, oh, we have more work to do. I don't think the market will take those words very well. We got the December money supply, Scott, which is, as you know, something that I look at closely. 2022, the lowest growth of the money supply since the Great Depression of the 1930s. Now, that's something to think about. We have the greatest inversion of the Treasury yield curve in over 40 years, the most reliable single indicator of a recession. That's something to think about. Why would the Fed want to continue and even increase the inversion of the yield curve? That's beyond me.
Hello and welcome back to Cryptollennium. Before we get into the main topics, let's take a moment to appreciate some of today's most interesting crypto headlines. A new era as Cardano ADA-based stablecoin DJED goes live on mainnet. Bitcoin ready to break through 24,000, vital signs provide clues. Why a 50 basis point rate hike could be disastrous for crypto and the rest of the market. BlackRock increases stake in crypto-friendly bank Silvergate to 7.2%. German bank managing over $428 billion in assets to offer Bitcoin and crypto services. Tesla has detailed a $140 million Bitcoin loss in its SEC filing on Monday. Algorand rises 30% as the founder sneaks into the list of personalities to watch in 2023. Derivatives trading giant CME sees a large influx in crypto traders seeking refuge from the fallen FTX. And a new survey shows that 80% of all millionaires want Bitcoin. So without further ado, please like and subscribe and let's dig in. First things first, a new era as Cardano-based stablecoin DJED goes live on mainnet today. Ethereum rival Cardano has seen its first over-collateralized stablecoin DJED go live on mainnet. DJED aims to be pegged with the US dollar and is backed by Cardano's native token ADA. Last month, DJED issuer Coty announced that DJED had transitioned to a multi-chain network that now supports private payment networks. The issuer, Coty, said the changes would assist with the widespread adoption of crypto assets as payments for goods and services. It should be mentioned that DJED has been one of the most anticipated news in the crypto market, especially for ADA investors, as they believe it is a good enough catalyst to move ADA significantly. Some say as significant as 100% in January. We only saw 50%, but that's still a dramatic pump. DJED will be a linked bedrock to open up opportunities for the Cardano ecosystem. Following that, the developers have acquired more than 40 partnerships to enable the proper utilization and adoption of the DJED stablecoin. A little bit on ADA, its price has started to imitate its own network's growth. So the DJED algorithmic stablecoin is just one of the latest updates rejuvenating the Cardano network. Earlier this month, co-founder Charles Hoskinson announced that the ecosystem would expand via custom-built side chains. While the network has continued to grow in ecosystems, the native token ADA has not been left behind. Pretty much a 50% run-up right here. And the moment that you've probably been waiting for, Bitcoin ready to break through $24,000. Vital signs provide clues. We saw yesterday that Bitcoin has slowed recently, with price action relying on previously recovered support areas to continue its uptrend and outstanding performance since the beginning of the year. Lately, there have been more expectations of Bitcoin breaking into new levels and reaching yearly highs. Despite this slowdown in Bitcoin's price action, some indicators do suggest that it may be on the verge of a significant upside along with market sentiment. So this chart clearly shows that investors are becoming optimistic. Sentiment is improving. Not just one, but 3 different ETFs have added over 1,465 Bitcoins this month. This is referring to institutions, and this indicates that the crypto industry's market sentiment has changed since the beginning of 2023, despite crises like the bankruptcy of FTX, Three Arrows Capital, and the recent feud between Gemini and Genesis. So this chart is showing the similarity between now and the previous cycle of 2018, 2019. The author of this tweet is likely assuming that we are in this zone right here. So there was a top here. We made our way down for quite a while, months of long downtrend supply zone. We hit this accumulation period, months of chop and consolidation, which was arguably in our cycle, this would have been November through probably the end of December. Or maybe even backtrack it to when Bitcoin dropped in June. But either way, we made our way out of this valley and are currently retesting an area that is just outside of the previous cliff that we fell off of. So kind of similar to the previous cycle, and safe to say that we could be seeing something similar, or we'd be right here. And then we're going to see a little bit more price action where people are saying maybe 29,000, 30,000 before we make our way back down, consolidate some more, and then finally meet Bitcoin at its halving date. Bitcoin could see further downside correction if the currency fails to clear $23,250, which can result in a failed attempt to further lean on the support line of $22,650. What if the Fed raises interest rates by 50 basis points rather than the 25 basis point rate hike that the markets are currently expecting? The crypto and legacy markets could see a spike in volatility in a few hours, according to Jeremy Siegel, the Wharton School of Business professor. He told CNBC's Closing Bell Overtime that it will be a disaster if the United States Federal Reserve increases rates by 50 basis points on February 1st. The professor insisted that if the Fed mentions any figure that's not 25 basis points in tomorrow's meeting, the effects would be far-reaching. Besides changes in interest rates, Jeremy wants to see the Fed change its statement's wording and expressly mention that their monetary policy decisions over the past months have been working. He adds that it would be refreshing for the Fed to assure the market that they are near the end of their tightening cycle. Economists expect the Fed to increase interest rates by 25 basis points to 4.75%, up from 4.5% on February 1st, 2023. And as a refresher, the bank did start raising interest rates in January of 2022. Over the months, the prevailing interest rate in the United States has risen from 0.25 in January of 2022, just a year ago, to 4.5 by the close of 2022. This is the fastest that the Federal Reserve has ever raised interest rates in the history of the United States monetary policy. With this said, we will keep our eye on the market and keep you updated on that FOMC meeting. If you made it this far, please like and subscribe, and we'll see you tomorrow.